We did promise exclusive conversations, and this one is one I have the privilege of having on a regular basis because the person I have it with, my guest for this particular chat, is a good friend of mine, someone I've worked with, someone I've greatly admired, someone who has taught me more than most people would have. And I continue to learn from him because we continue to have these conversations. We're going to take a look at the institutional side of the brokerage world and the financial services world. There's a weird crossover between what institutions want and need from a service perspective and the fact that there are trading brokerages and online CFD platforms that can actually service the need if they understand where to meet the institutions. And it's something that we've been looking at for quite some time. It's something that I've spoken to Kearabilwe about for the longest time. So I'm happy that he's here. I'm glad that I get to just have this conversation and see where we stand kind of on institutional spaces and what the institutional market looks like. So Kearabilwe Nonyana joins me to just see if we can dissect that and see if we can get through that. It's always lovely to... I think you and I catch up. We speak on a daily basis, but I think for us to be able to sit down in these kinds of contexts it doesn't happen often. It happens when something major happens or something in the institutional space develops.
Yeah.
But I want to look at perhaps as a starting point, just like how we've transitioned from where we've come from to where we are. You and I came from a brokerage space. We worked in the brokerage world and all of that. And you've been moving more and more into Insto as the years have gone. How is the institutional market set up at the moment?
Well, I think the transition into institutional trading was particularly because I saw that some of the products that were there in the online space, especially the technology and particularly in terms of product type, in terms of the usage of the products which were available, were not expertly known within the South African market. And I think with institutional space, there's so much latitude in terms of the fact that the banks are so dominant and they've kind of essentially crowded out everyone else and just given products which are more profitable for them and essentially become the only people who make markets in those sort of products. And I think in the institutional CFD derivative space, there's so much space for that technology and that sort of product to be used by hedge fund managers, portfolio managers, and other brokers. And I think it's a more cost-efficient a way of accessing global markets through these platforms and essentially give you more diverse range to different assets in places that you might have never thought about.
You split them up into almost categories where you say hedge funds, other brokerages, asset managers. All of these guys, I can imagine, have different requirements and needs. But the one thing that I found as a common thread, and you and I have spoken about this before, is the common thread is a well-structured institutional offering can service all of these clients. You can actually service another brokerage at the same time as servicing an institutional hedge fund if you understand what the needs are of each of these segments.
And that's particularly true. And the needs may not just be product type, it's how they differently regulated. I think South African financial markets, especially in the savings space, the CISCA as well as Reg 28, has given certain rules for different types of product because these are public products. And I think as a broker, you need to be at the forefront of understanding that regulation such that your products become fit for purpose for your end client. I mean, in the broker space, you have regulations such as ODP regulation. In the hedge fund space, now they've come under CSICA and Reg 28, and some hedge funds are getting into that space. Now you have retail hedge funds, you have qualified investor hedge funds. In the asset manager space as well, derivatives essentially become an overlay strategy for most of these guys. So it's an understanding what the different regulation is, such that you make your product fit for purpose and you can give that access to the end client, which would either be other brokers, asset managers, or hedge funds.
You bring up ODP, and I want to look at it in the context of the South African market. You cannot service an institutional asset manager, a hedge fund, another brokerage without an ODP in South Africa. You simply cannot. An FSP license or Category 1 FSP license is inefficient to service and properly service the institutional market in South Africa because the legislation doesn't allow.
And speaking, these are conversations we've had before, and for me, that's just the starting point. For institutional
It's like the basics.
that is the starting. They're never going to give you a meeting if you don't have those. I don't think it gives you an added advantage because essentially, once you start competing with balance sheets, and what I'm speaking about in this context is once you're a bank and you're a bank ODP, you're only just given a higher status because of the massive balance sheet that sits behind you. So for me, an ODP is the starting point. It's not the end.
It's basic criteria. Then you bolt on after that because there's, like you said, there's things like technology, there's things like service, there's research that goes into it, there's execution and execution platforms. Hedge funds, asset managers, and that don't execute the same way a retail business or a retail trader would execute because they're doing volumes, they're doing things that require custody services and all those other things. The ODP starts you off, gets you into the door to have the institutional conversation. What else then do you think becomes the next step in the bolt-on strategy?
Well, it's truly understanding what the end client is trying to achieve by using the product. And I think sometimes in the space you find that more products don't necessarily mean a better service.
Yes.
It just be concentrated on a specific product, and that may be the product that solves the need for that asset manager, that portfolio manager, that broker. So sometimes looking at institutional liquidity as a holistic thing where we will service every single instrument for you is not the way to look at it, because distribution matters. And at level of distribution, that's when you will start seeing that product can fix a problem for them. So for me, the ODP is the start. The next step is getting enough distribution in the names and the products that those clients really need. You can't compete on every single product that you have as an offering. So finding niches and solving problems. And for me, I always say in the institutional space, it's almost a consultative process because your client is almost like a baby. And essentially, you can tell you what they really want, but sometimes you have to give them what they really need.
Yes. And especially when you have the experience, right? So when you know the product set, you know this is what the client wants. What you said about the client wants to achieve this as an end result. And
Correct.
You know there's 7 different ways to get there, and you advise the client on the best way. Might not be what the client already has, but like you said, it's what they need.
And essentially, it's that level of having that consultation. And you cannot do institutional deals if you cannot have a consultative approach. It's not a one size fits all. Let's fit a square peg in a round hole.
And that's the other thing I want to look at is it's almost tailored solutions, right? It's almost each solution is as individual as the institution you're building it for, because I might want to have custody of the assets that I trade on or that I purchase. I might want to have physical settlement of the products. I might not want to be trading in derivative products because of the mandates that I have or of the investment structure that I have as a business. And so when you're dealing with institutional relationships, the relationship is part of it, but now the solution itself also needs to be specific to that client, and it might not be the same as what you give to another client.
True. I mean, in the hedge fund world, if you ever think about it, there's some hedge fund managers who don't even want to use derivatives, but they want to trade on margin.
Yeah.
And essentially they use their shorts to be able to essentially lever in that way. Meaning they actually go and borrow stock, short the stock, and then use that cash to buy in another stock. So that's a pair trade. So you got to know who the manager is behind that, who the head of that trading desk is, what do they want to do, how do they want to achieve it, and how much comfort can I give them. Comfort is the number one bolt on to that. You can never sell anything to anyone who does not have comfort. And truly speaking, comfort can only be built over time through trust, through relationships.
100%. It comes back to, I think about the where you and I were having this discussion around high net worth, ultra high net worth clients, and how they are very similar to institutional clients in that it is a trust game, it is a comfort game, it is a security game, because the reality is the tech out there is the tech. The tech is always going to be the same tech. The providers are always going to be the same LPs. The flow doesn't change, but the comfort that you give your client around, we can execute when you need us to execute the most. I think for the institutional game, that's kind of what sets it apart from the rest of the online, not even the trading space. I want to call it the investment management space, because it goes beyond just the day trading, the swing trading, and all of that. For the institutional client, it's portfolio management, portfolio restructuring, long-term decision-making that comes with it. And if I'm in it for a long-term thing as an asset manager, I want my service provider to understand my long-term objectives and I want to be changing service providers every 6 months. That's terrible.
And true. I mean, with some of the conversations that had with heads of trading, they actually are reducing their broker list.
Yes.
They want to interact with less people. So now you're getting to a point now where they don't want to add more brokers, they actually want to consolidate that. And one thing I was telling a colleague at this conference was, you know what? People don't mind paying up for trust.
Yes.
It's not about who's always the cheapest. They
about
don't
who's the
mind
best.
paying a little bit more for your service if they trust you. And trust can only be built with longevity, and that's the only way you'll ever build trust.
That's it. And the institutional market is very much like that. It doesn't waver from a trust perspective. It's a while to build that trust, but once you have it, it's probably one of the biggest assets that you then have in managing institutional relationships, whether you are with one particular service provider, whether you end up moving to a service provider. Trust is fundamental to, like you said, it goes hand in hand with comfort as the things you need to make sure are there alongside all the other things that we've spoken about. Yeah, I want to look at the side of the institutional space where institutions are now becoming more specific in their demands, in what they need, in the product sets that they need. We've spoken about everything from, as you said, pair trades to institutions that come in and say, I need an arbitrage structure that I can leverage off of if I am going to be dealing with my local business and offshore products. I need something that kind of reduces my currency exposure risks and all those things. I've noticed that a lot of the institutional conversations are now becoming very specific, which also makes it harder to serve. But if you have the set and you have the know-how on how to define what it is you need to give the client, it's also even easier for you to then say, you want this very specific thing, here it is.
It goes to almost becoming a chameleon and changing you need to. And me, as I said, a diverse amount of instrument does not mean that essentially you can win any sort of deal. It's do you change yourself into fitting what the client needs, and not necessarily needing your client to change into fitting into what you offer.
That's it.
And for me, it's at the level of that, in that consultation process, listening to what they want and finding the best way to creating what they want. And essentially that's the freedom you have once you have an ODP, that you can essentially now start writing products that your clients are specifically needing from you. And for me, what also learned as well is the fact that localization matters. What I mean by that is having local products that fit that market matters more than having access to global markets. It's only recent that there's been an expansion of the regulation in Reg 28 to allow people to start putting money in other countries. We've always had a high level of prescribed assets, and it's kind of literally led to that 60-40 kind of portfolio in 40% fixed income, and majority of that fixed in is in government bonds, and essentially the rest of the equity exposure is in the top 40 stocks, and essentially it's to almost just following your benchmark. But right now, because of the fact that expanded, it's given access to global markets and giving access to more assets. But the truth about it is the majority of brokers, asset managers, and hedge funds are still operating in South Africa and would need African product.
You and I can do this for hours, and we do it for hours. But I want to thank you. I want to thank you for coming and sharing the learnings that you and I speak about freely, that people might not have an appreciation for and an understanding of in the market space, and allowing us to kind of be able to put that forward so that the FMAS community, the community can understand a bit more around the fact that the institutional landscape is different to the retail landscape. It is different fundamentally in every single way, and it requires a different service. It requires a different level of touch. Thank you, as always. We couldn't captured what we wanted to and what we hoped to about the institutional space better.
Kearabilwe.